So let's discuss the setup for international stocks with our next guest. Joining us now is Chaitanya Kandhari, the Deputy CIO of Solutions and Multi-Asset over at Morgan Stanley Investment Management. She's also the portfolio manager of Morgan Stanley's Passport Overseas Equity Portfolio. Chaitanya, thank you very much for being here with us on Power Lunch. Maybe we'll start with a kind of umbrella-type question with regard to how a CIO involves the international markets in their portfolio strategy. Just how important should they be right now?
Sure. I think the big picture question here is, what is the share of the U.S. market in global indices, right? 65%. The last time U.S. was this high, it was in the 1970s, and that share came down. Europe has come down from 15% to less than 5%. Japan is also in the heydays was at a very, very high level at 40%, 45% of the market cap. And at this stage where all these markets have come to such low shares in the overall global index, and with the macro fundamentals, both in terms of growth, policy, and also the dollar, where the view has been that this is a weakening run for the dollar after having done so well in the last 15 years, one of the best runs it's had from a duration perspective. The case for international looks compelling. Like, when all of this dust settles, do you really want to own this much in the US, 65% of the global index? Or do you want to reroute some of that position and rebalance in some of the other areas in the world that are seeing compelling opportunities? So I think from a CIO level, I think that shift is important, that broadening both within US and outside the US is the key strategy for us, both at the asset allocation level, but also from an equity portfolio.
So, Chaitanya, the American exceptionalism trade was very well placed over the course of the last, say, 4 or 5 years, certainly since the end of the pandemic. If it's the case that you are making to diversify a little bit more away from those U.S. markets, what are the top picks, and where should you be allocating some of that money more towards in the global market?
Yeah, so I think I'd go from, the highest capitalized market, which are the more developed markets. I think their thematics really matter. So understanding the AI supply chain, both from, the ecosystem in the US, but the ecosystem in China as well, which is equally broad and thriving, picking those opportunities at, the AI supply chain level. I think the other big opportunities, industrials, whether it's in defense, in electrification, in autonomy, again, lots of North Asian markets and even individual countries that have a lot of these industrial sectors. Financials outside the US are also a very, very interesting sector where in emerging markets, you've seen monetary and fiscal orthodoxy and real rates that are high, and central banks that have been much more orthodox and have tightened preemptively, now getting into a rate cutting cycle, which will lead to a new credit cycle with loan growth. And in other pockets of Europe, where you have the yield curve as a big driver of the net interest margins, but also increased M&A and loan growth coming, M&A activity leading to loan growth in some of the European financials, and of course in Japan too, with the yield curve steepening. So financials, industrials, the AI ecosystem, and how that shapes up in the two hemispheres, the West and the East, are interesting themes. We have geopolitical hedges, be it in gold, in silver, in energy, in mineral assets and materials that are spread across the world. And I'd say, country level interesting ideas, whether it's India that has gone through its tightening and gone through its excessive valuations and is kind of bottoming here.